Welcome to MarketSnap's daily market rundown. The AI euphoria reality check finally arrived with a vengeance today, and it wasn't just a tech wobble, it was a global rout that started in Seoul and ended with the Nasdaq getting hammered. While the Dow barely budged, the rest of the market tells a very different story about where we are in this cycle. Let's get to the numbers. The S&P 500 dropped 1.4%. The Nasdaq Composite took a 2.2% hit, and the Russell 2000 fell just under 1%. But here's the interesting part. The Dow Jones Industrial Average was practically flat, down only 0.09%. The VIX, our fear gauge, spiked nearly 13% to just under 19.5, confirming this wasn't just noise. Institutional money is getting nervous. The big story today was the complete decoupling of the Dow from the rest of the market. While tech stocks were getting crushed, defensive sectors and value names held their ground. This is the kind of rotation long-term investors love to see, breadth over hype. Now, the carnage. This was a semiconductor massacre. Micron Technology cratered 13% ahead of its earnings report tomorrow. Talk about a make-or-break moment. SanDisk lost nearly 14%, Vertiv Holdings dropped 11%, and ARM Holdings fell 10%. Lam Research, KLA Corporation, and Marvell Technology all shed over 9%. The chip rout was led by South Korea's KOSPI, which plunged 10% in a single session, triggering a trading halt. That's not a healthy correction, that's a panic. But while tech was bleeding, some names were quietly printing green. Johnson & Johnson gained 3.4%, Merck added 3.6%, and IBM surged 5 cents, a clear signal that money is rotating into quality dividend-paying names. AT&T, Progressive, and Target all rose over 3%. This is the playbook for a higher-for-longer rate environment. Safety first. NVIDIA dropped 4%, and Tesla fell nearly 6%, but the most active list tells the real story. SpaceX was actually up 1%, showing that not all AI-adjacent names are getting sold off indiscriminately. Micron was the most active loser by volume, which tells you traders are positioning for a big move tomorrow. The catalyst for today's sell-off? A perfect storm. The Fed's hawkish stance is finally sinking in. No rate cuts anytime soon. Then you have the AI infrastructure spending question. The three companies funding the entire AI build-out are now borrowing money to do it, and the market is punishing them for it. Analysts have never been this optimistic about earnings growth, but history shows exactly what happens next when expectations get this stretched. There's also a fascinating dynamic playing out with oil. The U.S.-Iran peace deal is progressing, with the U.S. issuing sweeping sanctions waivers that unlock billions in Iranian oil revenue. Oil prices are falling below $80, which is actually good for the Fed's inflation fight, but for energy stocks. The market is now pricing in a completely different macro environment than just a few weeks ago. And in a moment of historical significance, former Fed Chairman Alan Greenspan passed away at 100. His legacy, the so-called Greenspan put, is being debated heavily today. New Fed Chair Kevin Warsh has already signaled he won't be following that playbook. The message is clear. Don't expect the Fed to save you this time. Looking ahead, this week is packed with earnings that could either validate or destroy the AI thesis. Micron reports tomorrow, the most important print of the quarter. FedEx reports this afternoon, which will tell us about the health of the global economy. Carnival beat today, but guidance disappointed. Also on deck, General Mills, Paychex, and Darden Restaurants. This is the week where narratives get confirmed or shattered. You can find exclusive earnings transcript summaries on MarketSnap. Sector-wise, the only green this week is energy, which is barely positive. Healthcare is holding up, and financial services is flat. But technology is the worst performer, down nearly 3% for the week. Basic materials is also getting crushed. This is a market that's saying, show me the earnings before it rewards any more multiple expansion. The one-week winners tell you where smart money is hiding. Robinhood is up 10%, traders betting on retail activity picking up. Brinker International and Texas Roadhouse are both up over 7%, showing consumer spending on experiences remains strong. BWX Technologies and Fluor are up on infrastructure and nuclear spending. Meanwhile, the one-week losers are dominated by space and AI hype names. SpaceX is down 26% from its IPO price. The post-IPO euphoria has completely evaporated. AS Space Mobile is down 15%, Palantir lost 9%, and AppLovin dropped nearly 9%. The market is punishing anything that ran too far, too fast. Few company-specific stories worth noting. Backblaze surged 30% on a $335 million AI storage deal with CoreWeave, proof that AI infrastructure spending isn't dead, it's just rotating. Meta is reportedly building a prediction markets app to compete with Polymarket and Kalshi, which is fascinating for the fintech space. And Walmart is buying Vibe.co to expand its advertising business, signaling that retail media networks are the next big battleground. The big question everyone's asking, is this the start of a real correction or just a healthy pause? Morgan Stanley's Andrew Sliman called it healthy and good for the markets. Gary Cohn said the market would be floundering without the AI energy trade. But the contrarians are pointing to a tech fear gauge nearing 2-decade highs. The truth is probably somewhere in between, but for long-term investors, days like this are where portfolios are built. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. Remember, days like today separate the traders from the investors. Stay disciplined, keep your focus on quality, and we'll see you back here tomorrow for the Micron earnings breakdown and all the fallout. Don't forget to check out our exclusive SWOT analyses on the stocks that matter most to your portfolio.